What if I told you there's a way, a proven way, to actually boost your investment returns over the long haul, while at the same time slashing your risk? Sounds too good to be true, right? Almost impossible, but it's real. And in the world of finance, it has this legendary name, the only free lunch. Welcome back to the Neuro Finance Masterclass. Today, we are serving up the one meal that could completely change your financial future. And trust me, it's a meal you're going to want to finish. All right, so let's just dive right in. This all comes from a foundational idea by none other than Nobel laureate Harry Markowitz. He's the one who said, diversification is the only free lunch in finance. Now look, that's not just some snappy one-liner. It is a powerful mathematical truth, and that's exactly what we're going to unpack today. So, what exactly is this free lunch? Well, you can think of it as the ultimate antidote, the cure for one of the most common and frankly most dangerous mistakes any investor can make, and that's the endless hunt for a sure thing.
And hey, let's be honest with ourselves for a second. Are you secretly on the lookout for that one stock? That one crypto token, that one magic investment that's just going to make you rich overnight? It's so tempting, isn't it? It's basically the financial world's version of a lottery ticket. But I have to be perfectly clear here. Taking all of your hard-earned money and just piling it into one single thing, that is not a strategy. In neurofinance, we have a name for that. We call it what it is: financial suicide. It's a catastrophic, self-destructive bet against the simple fact that the world is unpredictable.
And this leads us right into a principle that is absolutely timeless. I mean, it's as ancient as it is mathematically flawless. Yep, we're talking about eggs, baskets, and the simple, undeniable math of survival. Just look at this. The difference could not be more stark, right? The amateur, they bet it all on one basket. And if, say, that one company's CEO gets caught in a scandal, that basket gets dropped. Every single egg shatters, total loss. The professional, on the other hand, well, they spread their wealth across hundreds of baskets. If one of them fails, it's a tiny bump in the road, barely even a blip. The core wealth survives to grow another day. See the difference?
Okay, but hold on, because real, true diversification is a bit more sophisticated than just buying a bunch of different stuff. This is where we get into what we call the art of the zigzag. And to understand that, you have to understand one crucial concept: correlation. So correlation, it's really just a measure of how much different assets move together, in the same direction, at the same time. And for our purposes, high correlation is the enemy. It's the villain of this story. You might feel diversified because you own, say, 50 different tech stocks. But guess what? If the whole tech sector takes a nosedive, they're all going to go down together. They're moving in lockstep. The real goal, the pro move, is to find assets that don't move together, assets that dance to their own beat. So let's really picture this. Let's see how it works. Imagine the stock market just zigs. It suddenly drops hard. Now, if your entire portfolio is just stocks, what happens? Oh man, the alarm bells in your brain start screaming. That fight or flight instinct kicks in. But for the investor who's properly diversified, a completely different story unfolds. While their stocks were zigging down, their other assets, maybe some government bonds or a real estate fund, who knows, they zagged. They hold steady. Maybe they even go up. They cushion the blow, and just as importantly, they calm those panic signals in your brain.
And that is the goal. That's the whole game right there. You see, you're not just building a portfolio, you are building a financial ship. And this ship has multiple independent, watertight compartments. So if one room floods, if one of your asset classes has a truly awful year, it doesn't matter. The whole ship doesn't go down. The ship and your peace of mind just keep on sailing.
That peace of mind, that's the real free lunch we're talking about here. Because, let's be real, this isn't just about protecting your money. It's about building a shield for your mind. It is about protecting your neurofitness. Just look at this chain of events. It's so logical and so incredibly powerful. Step 1, you diversify your assets with things that don't all move together. Step 2, because of that, you mathematically smooth out the ride. You reduce those wild stomach-churning swings. Step 3, that smoother ride prevents the emotional panic that leads to the single worst mistake you can make, selling everything at the bottom. And step 4, you protect your mind from itself. You protect your neurofitness. Okay, so that's the theory. But theory is useless without action. It is time to make this real, for you. So your cognitive task for today is to shift gears. We're moving from passive learning to active auditing. Let's apply all of this directly to your financial life, right now.
I really want you to take a hard, honest look at your own net worth and ask yourself this question, point blank. Is 90% or more of your total wealth tied up in just one thing? Think about it. If some targeted disaster hits that one specific asset, are you totally wiped out?
And these are usually the main culprits. For a lot of people, it's their house. For others, it might be a huge chunk of stock in the company they work for. Or maybe it's that massive all-in bet on a single crypto coin. And listen, even if you own your own business, which is amazing, that amazing asset can also be your single biggest risk. Be brutally honest here. Find your single point of failure.
So, as we wrap this up, I want to leave you with one final question to ask yourself about your own portfolio. Is it built to win one single high-stakes battle? Or is it a truly resilient force, spread out across the entire map, designed not just to survive, but to win the long war for financial freedom?